So today I want to break down like a company for you guys. A lot of people been asking like where do you go to look for stocks, what to look for, what are the sign that a company's performing great, and how to find those companies. And when you end up find those companies, what are key details that you're looking for before you make that investment, before you decide to buy that stock and put your money into that company. So today I'm going to break down Apple. We all know Apple. Either we have a device from Apple or we know somebody that owns an Apple device and is one of the biggest companies in the United States, probably worldwide. Um, I'm not sure how basic this is, but it's very basic, right? It's just apply yourself and do the legwork. You can actually make some good money in trading or investing in those companies, right? All right, so boom. So Apple, we have Apple right here, right? This might look all complicated, but it's very simple when I break it down for you, right? So this is live. So right now, today is Friday, December 27th, 2024, and Apple is trading at $254.01 as of this moment. And as you can see right now, it is down $5, which is like 1.93% for today. And if you go at the bottom right here, right, these numbers at the bottom, it shows you like, so the stock market opens every day at 9:30 on the weekdays. On the weekend it is closed. So at 9:30 when the market opens, Apple opened at $257.84. And that's how much volume that came on with that opening number, right? The highest it went for the day was at $258.70 per share, sorry. So all this number is per share, which means like for one stock of Apple today, it's $254 for one share of Apple for that company. And the lowest it went for the day so far, because the market's still open, it's like 1 o'clock right now, is $253.06. That's the lowest it went today. Even though right now it's at 54, it went actually lower than that to $253. That's how low it get for the day. And at the bottom where it says MKT cap, which is the market cap, which is the market capital for that company. And as we can see, the market cap for Apple is $3.84 trillion. The T is for trillion. It's $1 trillion company. It goes to show you how much space Apple occupied in the market. All right. And if you go at the bottom right here where it says 52-week high, so there's 52 weeks in a year. Okay. So for the year 2024, which is not over yet, the highest Apple went was $260 per share. And the lowest it went was $164.07 per share. So this, you see how easy it is. Like once you know this, like it's to break it down. So if I'm investing in Apple, I'm looking at these little numbers right now. These are little numbers. You're gonna get to the when you get to the back end, you actually start seeing what the numbers behind the company, how to really where they really make their money, and how you get paid by owning the company, by owning shares in that company. All right. This right here is the chart. So if you were to, this is on Google. I use my own chart, my own trading platform to do my chart analysis. But this is the basics. If you click on it, if you don't have your own like trading view, you could click on this right here. It gives you a very basic breakdown of the chart, like, which is like the company's stats, how they're doing and stuff like that. And it's kind of very basic. So you have one day. So again, if you were to break this down to a candlestick pattern like I usually do, um, and you turn to a candlestick. So now each one of these candlesticks again means a day. It means a day. And if you go down over here, each one of those means 5 days. And as you go down 1 month, each one candlestick means 1 month now. So it shows you the performance of that stock for that month. 3 months, year to date. So we'll be like from the beginning of the year to right now. That's the year to date. And then you have 1 year, 3 year, and so on and so forth. And you can always change it to whatever time period you want to see the performance of that company. So that's just the charts aspect of it. And then let's go over to financials, right? So the financials actually tells you more about the growth of the company. So how Apple been performing throughout the years, right? So if you're gonna put your money into a company, you want to know how is the company been performing the past 3 years, the past 10 years to see what's the growth. You know what I'm saying? How much money they're making and how much money you expect to make if you decided to invest into that company. All right. So the first line we have right here, it says revenue growth year of year, which is basically like how much money they make for that year. So we have 2024, 2023, and so on and so forth. We see so far for the year 2024, Apple has made $391.04 billion for the year 2024. And the year 2023, as you can see, is 383.29 billion, and so on and so forth. It shows you like the growth. As you can see right now, Apple is killing it. From last year, they're already up a couple billions for the year. And the year 2020, 2021 was an amazing year for Apple. As you can see, they went from 5% growth to 33% growth, from 274 billion to 365 billion dollars in a year. So that was during the pandemics, all that stuff. People were buying like a lot of electronics. People were staying at home, so there was a lot of money was flowing through the economy, and people were buying a lot of stuff, a lot of electronics just to keep themselves occupied. And you see the growth. So if you have bought Apple like around those time or have shares in the company, you'll see your money rise exponentially. And then if you go to the second line, you have cost of goods sold. So which is like the product they sold, you know what I'm saying? Like how much money they make from selling those products and how much the cost of advertising and all that stuff, how much of the money been divided and again from year to year to year. And as an investor, one of the main things you want to look for is the revenue and the growth profit. So the growth profit for Apple for this year has been amazing. 180 billion, 6% growth. As you can see throughout the years, Apple only had like we could say like only two bad years, which is like 2019. That's like the around when I think that maybe when the pandemic starts to happen or whatever it is, and it was down on like 98 billion they make for that year. And then the year 2020, as we can see, it went crazy, 104 billion. 2021, and the hype of the pandemic and stuff like that, $152 billion, and so on and so forth. And you can see the growth from 45% from 152. The next year it was at 170 billion, and then 2023 they took a little hit, probably like 1 or 2 billion they lost, and then 2024 they recouped to 180. Boom. You can see the growth from year to year to year. That's why you want to like when you invest in a company, you want to see the growth. You don't want to see stagnant. You don't want to see the company making $200 last year and they said they only make like $205. Yeah, it's growth, but it's only grown by $5, which is like nothing. But if you see it went from 200 to 220, then from 220 to 245, and you can see like the growth is exponential. It's rapid growth. It shows you that companies on a path or whatever they're doing, it's making them money, it's making the investors money. The investors are happy, the consumers are happy, so the company is performing great. And then like operating expenses also tells you like how much it costs them to operate. You know what I'm saying, every year. Um, 57 billion for this year, and the year before it was 54 and 51 billion. Stuff like that shows you like again the cost of business, the cost of doing business. You have to put more money into your company if you want to see a company growth. You know what I'm saying? The more money you put into it, the more money you should be able to make if you're doing things the right way. And all these at the bottom, again, you have operating income. That's how much money I'm making, like operating wise, paying people and all that stuff. That's the money coming in. And then you have other income expenses, for example, like miscellaneous stuff. Every time you buy, like, let's say, like, you had an Apple Watch and it stopped working, they have to give you a new one because you have a certain warranty, or whatever insurance that you have, they have to give you another a new one. They took that L to give you a new product at a lower cost, or even sometimes for free. So that's the cost of operate. That's the expenses part of that. And the other part you have at the bottom is tax income. I mean, that's again, that's on their end, the taxes they pay every year for operating and stuff like that, for the profit, and also for the provision of for what they do and stuff like that. These are good um things to go over when you are thinking of going into buying into a company. Before you invest your money, before you put your money into something, don't just put your money blindly, and then next thing you know, you're losing money and you don't know why you're losing money. You buying stocks because your friend told you to buy it. You're buying something because somebody told you to buy it, but you don't know why you're buying it. You don't know the history of the company. You're just going into it blindly. Do not do that. You work hard for your money. You want to make your money work hard for you. So by doing that, you do your research and you put your money into something that actually makes you money. The next slide we have is analysis. So analysis of that company, it's going to give you like per share value, the growth rate, how's the company moving and stuff like that. So per share value for the, 2024, we went from from 614 to 623. It shows the revenue, the growth is doing good, the company's making money, the earnings are coming in. So for Apple, I think Apple it pays you to own the for every share that you own, sorry, you get paid for it, which is in the form of dividend. So if you go down here, it shows you like they pay dividend I think every quarter, so every 3 months out of the year. So for every stock that you own, that's the dividend you will get. And it's divided. So the dollar is for the whole year. So for the first quarter, you get 25 cents for every stock that you own. You know what I'm saying? For every stock you own in that company, you get an additional 25 cents added to you. You can either reinvest it or you can either keep it for yourself. Most people would invest it back into the company. Some people would, if you have a lot of shares, that 25 cents add up. So for example, let me start pulling my calculator real quick. Um, if you had 100 shares of Apple, you know what I'm saying? Divide that times that by 25. It's $25. You know what I'm saying? That's $25 you could go ahead and buy you a McDonald's. $25 you could take that and just do whatever it is you want to do with it. But if you playing with the big leagues, with the big boys, that own like 5,000. You know what I'm saying? 5,000 shares of Apple, and they get paid for that dividend for that 3 months for owning the company. Come on, we're making money over here. You know what I'm saying? We're making money over here. And it shows you like how people, no, it's sorry, that's right, 1,200. You know what I'm saying? $1,250 for just doing nothing, for basically buying and holding a company. Every 3 months, you get paid that amount of money. You know what I'm saying? Which is money you can do whatever you want to. If you reinvest it back into the company, now you have more. With that more that you have, next time it comes around, your dividends gonna be higher as well because now you have more shares in the company because you purchase more, and now you see how the money is growing. You know what I'm saying? Just take patience, and it could get you there. Um, if you go at the bottom again, you have growth rate on how the company is growing it from a year to year basis. a 3-year average, how Apple is growing. Apple is just taking over, man. Like the way they're moving, the way they're, it's a company that shows you that he's gonna be there for a while. It built to last. You know what I'm saying? Steve Jobs did an amazing job building that company the way it is today. Unfortunately, he passed away, but the legacy and the people that are operating it, it just keep it going. You know what I'm saying? Um, so again, growth rate is amazing. On a year-to-year basis, it is growing. Earning per share on a year-to-year basis, it's doing good. It's doing good. From 25, then went to 2.2, 2.69, sorry, and then they taking a little L a little bit, but they're gonna bounce back. And that's the thing to like, if you know a company is good, just because they have like a bad performing month or a bad performing year, doesn't mean the company is trash. You know what I'm saying? It just means that's how business is. You're not gonna have a good year every year. You aim for that as a business person. You aim for that. An investor, you're aiming for that. But things happen. That's when it comes to like patience and holding and knowing exactly what you're buying into. So if I know the company is a good company and I just have it a bad year, I'm gonna still hold my stock because I know next year gonna outperform it, and the year after they're gonna outperform it again. I'm gonna make my money back. You know what I'm saying? And that's when it comes to like knowing what kind of investor that you are. Are you buying to hold or are you buying for a short period of time? Are you a day trader or are you a investor? That's something you gotta realize before you even get into that kind of financial side of things. Know what kind of person you're, what kind of goal you have for yourself when it comes to putting your money to work for you. Um, yep. So one other thing that they have is when you go and again earnings we talked about earlier. It happens every 3 months where you get on an earnings call. Anybody can listen to it. If you have Robinhood or if you have Fidelity or other trading platform or investment firms, you can actually sit down on a call and you hear all the CEOs for Apple and different departments talking about how much money they make for this past 3 months and how they are operating, what is the company's doing, what is the new in stock and stuff like that. All these things you could actually sit down and listen to. Like the one coming up is on January 29th, which is like 33 days from now. Like one thing I like about this, right? It tells you everything you need to know if you just put in the work and just do the research. You know what I'm saying? So right here is the reported ESPS, which is earning per share. So they are aiming for 1.64 growth. On the forecast is they think it might do 1.60, but they think they will do a little higher. So the growth wise, which is the earning per share surprise, it should be like 2.50. Again, that's the forecast. That's what they are predicting. That doesn't mean that's what's gonna happen. You know what I'm saying? But it is very plausible. So we'll see what happens. We'll see what happens. But again, anybody could get on an earnings call if you're investing in that company. They will like if you invest in that company every 3 months, they'll send you like either an email or your friend will tell you, hey, Apple got an earning call coming. Do you want to listen to it? And it's live. They have to do it because it's being transparent with your investors, so they cannot lie to you. If they lie to you or misleading you, you could sue them and stuff like that. So yeah, so they have to be very transparent and they have to follow the laws. The last side that we could look over is the comparison wise, right? Which is a great tool when you invest into a company, right? So right now we have Apple, HP, and Cisco, right? Or you can use other ones to if you want to compare other companies, right? It shows you the comparison between Apple and HP, for example, right? If you go at the bottom, AAPL stands for Apple. That's the trading stock symbol. And at the bottom, you have HPQ, which is for HP, right? So the price for Apple, one share of Apple right now is $254.69. And the price for a stock on HP is $33.15, right? And if you see Cisco, it's $59.31 per share. So again, Apple is selling for way more. The analysis sensors on right here on the sides is telling people to buy because based on the growth of the company, they tell you to buy, and they're forecasting for it to go to higher, 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 right? And again, for HPQ, they tell you to hold, and for Cisco, they're telling you to buy. Again, these are just analysis. You don't have to follow none of the stuff they're saying, but it's just giving you an idea of where the company stands based on analysis from certain people or certain companies or certain firms. That's what they're telling you. You know what I'm saying? There's growth in this company. You know what I'm saying? HP is not going nowhere. Cisco's not going nowhere. And Apple is definitely ain't going nowhere. So it shows you, right? And over here, it shows you the market cap, which is like how much, or the market they own and how much money the company is worth. As you can see, Apple is worth 3.85 trillion dollars. HP is worth $31 billion. And then you have Cisco, which is worth $236 billion. And each of these companies, they pay dividend. Apple gives you 0.39% per share, and HP gave you 3.46 per share, and Cisco gave you 2.67 per share. So if you're looking for a dividend stock that pays you more, I would buy HP because HP gonna give me more money for holding it. They pay you more percentage wise for dividend wise for holding it. Like so, again, my calculator right here. So HP is trading at 3.15. It's 3 point. Okay, that's good, which is good. So on a yearly basis, on a yearly basis, HP is giving out $3.46 for the year, but divided into three every 3 months is a quarterly. So that you get like seven, around 60 something cents. Yeah, around 60 something cents per every every 3 months. Again, I'm not too good at math, so but you make a little bit more on for dividend wise because it pays you a little bit more than the others. Okay. So again, at the bottom, just the current price. Again, the recommendations to buy and hold and stuff like that. It shows you the price target for past 6 months, so the past 12 months, where they plan on heading. So Apple is planning like in the next, based on what they got going on, based on the market and stuff like that, they might go down to 246. Again, for HP and how they're moving, they're predicting to go a little bit more higher from $33 to 36. Again, these are just speculations. Nothing is ground to say, but that's where they're predicting themselves to go. You know what I'm saying? So I know the video is a little bit long, but it's a lot of good information in there. And it shows you the basics how to do your own research. You know what I'm saying? So if you have any questions, again, any other company you want me to break down, just say it in a comment. Like, follow. I'm gonna do this every week. I'm trying to break down a video of investing and how to actually do it. Break it down the very simplest way. I'm not trying to sell you nothing. I'm just trying to show you what I know so far. I don't know. I don't have all the answers. If you have a question, You can ask me, I'll find a way to get a good answer for you, or we could do the research together and stuff like that. You know what I'm saying? So this was the breakdown for Apple. Very, very simple. I was just using Google itself, but more in depth, I would go to my chart, what I have here, and I would break it down to where I would see the company could go, what I would predict, and stuff like that. Just doing my own analysis, my own due diligence. And that's important. Do your own due diligence. Do not just buy stuff blindly just to buy it. You know what I'm saying? Even me right here, don't trust what I said for law. No. Do your own research. If you have questions, ask. And just know where you're putting your money, and don't just follow people blindly and just do your own investing. Do your own thinking and do your own research, because there's money out here for all of us to eat. You know what I'm saying? We wish that teach us all these stuff when we was in school, but they didn't. So it's up to us, you know what I'm saying, to defend for ourselves. Nobody gonna save you but yourself. So do that. So with further ado, I'll see you guys next time.